So how does one become a good investor? Well, it takes research, of course, and the mental fortitude to withstand price fluctuations. We all like when the stock price goes up, but when the stock price goes down, it can be uncomfortable, and we can get emotional, and that can lead to poor investing choices. Some say investing is mostly psychological and only requires a little bit of strategy. And one reason I like to focus on stock crashes is because instead of being something that's uncomfortable, it can be a great opportunity to add a new position or expand an existing position in your portfolio. And what would Buffett do? Or say, be greedy when others are fearful. But keep in mind that not all stock crashes are created equal. Like if a stock that crashes is a penny stock or a very speculative stock, that can keep going down and down and down, and you have to be very careful for those circumstances. But on the flip side, if it's a great company with a really good balance sheet and a proven record, if there's a dip or a crash in that stock, it could be a great buying opportunity with very limited downside. Let's look at some historical data of a couple of great companies that, if we bought in those dips and crashes, what would have happened? So the first stock we look at is Procter & Gamble, and this is a clear example of the various times where they crashed or dipped, where if you bought in during that time, it would have been a great buying opportunity. The first time was in the dot-com bubble, and the second one was the financial crisis, and then 2 more times in the past few years, actually. So those would all be great buying opportunities with massive gains. So the next chart we have here is Facebook, and this shows the last 2 historical years, and in 2018, it crashed, went back up, and then crashed again, and then went back up. So these were great buying opportunities, these crashes. And I want to illustrate one different thing here with Facebook. So if we look at the peak in 2018 where it instantly crashed, and we bought right there when it hit a little bit over $174. Even at that price level, a year later, we would have made a great gain with the stock price today at over $204. And another thing to learn from this chart and the previous chart is that every time there was a stock dip or crash, it lasted for a couple months. So a good thing to do is when there's an initial crash, you can make a partial position. Don't go all in all at once in case it goes even lower, because you want to keep buying in and averaging down every time it goes lower for these really great companies that are going to give you really good value. So I like to take advantage when stock crashes. Let me know if you have any tips for when stock crashes or investing. Thanks for watching, and don't forget to like and subscribe so that you don't miss out on the next stock market crash video.